So our global value market cap fund has a very simple structure, and it actually is the same structure that all our domestic Australian funds have. We have only two single asset types. So we own cash and we own equity investments. And in this case, we own global equities in the global value market cap fund. So that means that our funds do not have any debt or leverage of any kind. We do not use derivatives, so we don't have any call or put options. We're not short selling, so we are long only. We're only buying the equities, and we only own two assets in the trust balance sheet, which is cash and the stocks that we own. We don't use any currency hedging, and I'll explain why we don't in the following slide. And the investment doctrine and the investment mandate of the fund, the objective of the fund is to maximize long-term capital growth. And how we do that is we seek to identify businesses that are undervalued from an intrinsic valuation perspective with respect to their market value. The businesses we own typically have either no debt, so no net debt, so their cash assets are greater than the financial debt liabilities, if they do have financial debt. If they do have net debt, the debt is typically under 2 times operational profit. So out of the small segment of companies that we own, both domestically and internationally, that have debt, if they do have debt, it's less than 2 times operational profit. So we don't own any debt in the vehicle itself, and from an underlying investee company, the companies we own, the businesses we own, typically have very little debt, if they do have net debt at all.